Andrew, good morning. How are you?
Could never be better, Jeff. Could never be better in this very interesting time the world's
Yes.
living in. I've decided today we're going to approach this in a very positive way. And we're always pretty positive, but there's just so much crazy stuff going on. And the numbers in some cases are a little bit bleak. But
Yes.
I think there's a positive spin on this. And that is that when times are a little bit uncertain, there's tremendous opportunity. We've talked about it before, but I can't emphasize it enough because I'm seeing some sales out there in certain pockets of the market, and they're kind of like eye-popping sales in the sense like, wow, that buyer got a phenomenal deal. And I think there's some great deals to be had.
Yes.
So for anyone that's listening, yes, interesting times. A lot of people are a little bit uncertain. And so for that reason, things are somewhat slower out there, no question. But there's people out there taking advantage and they're getting some great deals. And this is a great time if you're a cash buyer or you've got your ducks in order, financing,
Yeah.
you can secure a fabulous property at a great price. And I've seen some stuff across the board, all the way from the Sunshine Coast, all the way out to the Valley, some tremendously good outcomes for people looking to purchase. So, wow, this is not a time to be sort of just closing off. If you're looking for opportunity, you should be out there hunting around.
Absolutely. No surprise, an election has been called and will be on April the 28th.
Yeah, just over a month, right? So actually, this is one of the shortest election. I think a typical election is about 45 days, but I heard on the news this is one of the shorter time frames. I'm not sure what it works out to be, but anyway, it's one of the shorter spans from calling the election to the actual election vote.
Yes. And I think to that end, we're going to do another podcast very soon, similar to what we did for the BC election, where we'll look at all the federal parties, their platforms as regards housing.
Yeah, how it affects real estate.
Yeah.
Which is our specialty.
Now, Carney, I mean, he hasn't been prime minister very long, but there's been a raft of stuff already that's come through. You know, he's eliminated the carbon tax. There's been a cancellation of that capital gains inclusion rate increase. I think there was a lot of people that sold last year to sort of get out in front of that. And now maybe.
Well, you know, he's obviously been sitting on the sidelines watching and listening to what Canadians are really concerned about and upset about. And
Yeah.
he's tapped into that because obviously that was Pierre Poilievre's position. And so he's taken those from him.
Yes.
And now I think the Canadian electorate is really focusing on, I mean, there's all these other issues which have been front and center stage, but now the big issue is who's going to deal with Trump the best? Who's going to be the leader that can deal best with Trump? And that seems to be right now the forefront issue in the election, really, is what it's all about. It's coming down.
Absolutely. And to that end, he's also included an enhancement of our Arctic defense capabilities, $1 billion purchase of the over-the-horizon radar system, and also another 400 some odd million to expanding Arctic military operations. So I think he understands the assignment, right?
Yeah. Well, again, he's he's a smart man. He may not be everyone's selection for prime minister, but he's an intelligent individual. And I think he knows what the issues are. But again, it's going to come down to who gets picked on April 28th. And I think we need an election. We need it quickly. We got to get this behind us. So the sooner this gets done, the better. And we can get back to the business of the day. And that's sorting out the tariff issue with the US, dealing with Trump, and also putting our own house in order, the Canadian economy, and getting our country back on track. So again, lots of stuff going on the political end. It's going to be an interesting 4 weeks or 5 weeks of election campaigning. So I'm looking forward to seeing how this all plays out.
Yeah, exactly. I know he's promoting that the internal free trade between the provinces to help create free trade within Canada. And it's not passed yet, but he's announced plans to eliminate the GST for first-time home buyers purchasing homes priced at $1 million or less. So maybe not so much a Vancouver-centric idea, but that's going to create a lot of opportunity for, I want to say, pre-sales and new condos in different areas across the country that aren't snuggling right up to that 1 million. It'll get some great savings potentially for buyers at that level.
So stay tuned. So we're going to come back to the election in a later podcast and do a slightly deeper dive into the policies of the political parties as it relates to housing.
Exactly.
Yeah.
Now today, we are going to talk about the high-end market and more on the theme of where are the opportunities, how do we capitalize on that. David always used to say to me, well, if that, then what? So we're going to give you the if that, and then we'll offer some suggestions at the end on then what, as far as how you can make this work for you.
Yeah. Yeah. Well, again, this is a segment we haven't touched on or focused on solely. And I think it's an area that obviously it gets missed a lot because when we're talking to our market and our listeners, a lot of them are in the price range of, say, 4 million and under. But today, I think it's sort of focusing just to sort of let you know what's going on in the higher end of the market, which is its own markets on its own, obviously. And we've definitely seen some price erosion at that end of the market and also a substantial drop in sales activity at that end of the market, whether we're talking houses, condos, it's the same sort of thing. That market has sort of hit the skids, so to speak.
Yeah. Now, I did a bunch of research, and I know you were doing as well. Do you want to go first, or do you want me to lead off?
I can lead off, Jeff. I was just doing a very surface quick look at the market. I took a look this morning at the detached market in the west side of Vancouver. Obviously, there's other areas of the market that have important high-end stats. Like, of course, West Vancouver would be the other one that comes to mind. But I didn't talk about West Vancouver, just talked about the west side of Vancouver, and I talked about $5 million and up.
Okay.
So for single-family homes, over $5 million this year to date. So from January 1 to March 24th today, there have been 10 registered sales over 5 million. This time last year, the same period, there have been 23 sales. And going all the way back to 2022, which is just before or right around the time when interest rates started to tick upwards, there have been 43 sales. So we've gone from 43 sales down to 10 so far this year. That's a pretty defined trend heading backwards.
Yes.
And I don't think there's anything that I see on the horizon that's going to cause that market to switch gears and start trending back up. So there's no question, a lot quieter. And I didn't point this out, 266 listings as of today. So over 5 million, 266 homes on the market, 10 sales this year. So that's what I would consider, and I think you'll agree, that is a buyer's market if there ever was one.
Absolutely. So I expanded the scope a little bit wider. I looked at the whole real estate board, and I broke it down into 3 categories.
Yeah.
6 million plus, 10 million plus, and 3 to 6 million. So, or 6 million to 10 million. So in that total market above 6 million on the whole board, right now there's 381 active listings. There's been 19 reported sales since January 1st. This is on the whole board, more than 6 million.
Yeah.
So the way that I looked at the data was I just looked at reported sales, not the actual date that the sale occurred on. And so some of those sales were from 2024, but also some of the 2025 transactions haven't yet been reported. So likely it evens out. I found that it's probably pretty good. So when I look at that and I think, okay, we're 3 months into the year, it's sort of 6 or 7 sales per month out of 381 active listings. It's not 4.5 months supply. It's 4.5 years supply of homes in this price point.
Yeah.
So it's an order of magnitude above a seller's market, and really very choosy market, lots of opportunities out there. Now, if you go to the 10 million plus subsegment, there's 133 listings right now over 10 million. So far, there's been 3 sales reported year to date, and that gives 11 years of inventory. Now, keeping in mind, it doesn't mean it's going to take 11 years to sell the house.
Right.
Just if no new houses came on for sale, it'd be 11 years before they were all bought up.
Yeah.
You know, that's a couple of careers for right.
You know, I remember back in 2018, 2019, and you and I had this conversation, I know for sure, Jeff, and I said, we had all this money flowing in from mainland China, a lot of big money people buying up homes, buying up these expensive homes. And the prices of these homes were rising quickly, 25% a year, they were going up in value. And I remember saying many a times, I said, if this money flow stops,
Yes,
this cuts off, this market is
over.
doomed. I mean, who is going to replace these buyers if they stop buying? And of course, what's happened in the last 8 years, we've had all the foreign buyers ban. So all that has happened. We've had the capital money flow restrictions out of mainland China, stopping the money coming out of China.
Yeah.
Had the provincial and federal government enacting taxes and policy, which basically has slowed to a trickle that market, giving them just no incentive to buy. And so now we're seeing what's happened. There's just very few buyers at that end of the market. You got all this expensive real estate.
Yeah.
Things moving. And we're starting to see some cases where there's been some tremendously good deals where prices have come down dramatically on some of these high-end properties.
Yeah, exactly. You know what? I did a couple more calculations, which I thought were really fun.
Yeah.
Only a nerd thinks they're fun. So I accept. I'm a nerd.
No, I think it's interesting stuff. No question.
So average days on the market for the active listings,
Yeah.
167 days. So that's on the ones not sold yet. The average days to sale in that 10 million plus subsegment, 101 days. And I would say it's probably that much or more, possibly even double that amount when you take into account relisting,
Yes.
agents being changed, that sort of thing. Like that 100 days to sale, it might actually be 200 or 300 days to sale.
No question. If you go back and look at the history, you'll see some of these properties have been listed 4 and 5 times, and where they started off at 9 million and they end up selling for 5 or 6.
Yeah, exactly.
Whatever. Yeah, no, for sure.
One interesting calculation I found too was the discount to the asking price. So just over 11.5% on average in that group. So when you look at the more affordable end of the market and in some of the condos, we'll get into that later, but remember that 11.5, because in some of the other, like it's only like 2% or 2.3%. So there's massive discounts. And I think it's not so much that the value is that much less. It's just that there's a lot of aspirational pricing that happens in this end of the market. If I'm a person that owns a $10 million house, it's not a stretch to think, well, it's my house. I'm special. My house is special. Maybe it's worth 15. There's a lot of that happening.
Yeah, but there's also things going on in people's lives. And for whatever reason, maybe they're not here now. And maybe with the speculation tax and the empty homes tax or whatever, that it's just too cost prohibitive to carry these properties. It just doesn't make financial sense.
For sure.
And, you can't rent the thing out and make it cover itself. That's never going to happen. So you decide you want to sell it.
Yeah. And you play the hand you're dealt. When the offer comes in, you work with it.
Yeah.
And that's where you land. Now, interestingly, in that $6 to $10 million segment, 247 listings, averaging 139 days on the market, days to sale, 66, and the discount to the ask, 8%, not 11.5, down to 8%. So just moving that one bracket down, there's a big reduction in the amount of negotiating.
But that's only the homes that sold, right?
Only the homes that sold, yeah. And then in the 3 to 6,
yeah,
1,357 listings, 124 days active, 175 sales, sold days on market, 61, and the discount to ask now just 5%.
Okay. But again, I think what the listener needs to understand is that in many cases, these properties have been on the market much longer than what you're seeing, because a lot of these are relisted properties. So they could have been on double that. You have to sort of go a bit further into the details.
Yes.
So those numbers may not be completely correct in the sense average days on the market might be much longer than that. And the actual discount from the original listing price is in some cases much more dramatic.
It could be 20, 30, 40%.
Yeah, exactly. Because you know as well as I do, when you make that one price reduction, sometimes it's all you need to go from, say, 4.6 down to 4.4. And then all of a sudden, boom, it's priced correctly. And 20 days later, it's gone and it sells for 5% below the 4.4. But where you started from, obviously could be a much bigger discount.
Exactly.
Right? So
when I take a look at the condos, and we'll tie this all together as how it works for people.
Yeah.
So from $1 million to 2.5. Okay, right now there's more than 3,000 of those listed, and this is all attached properties. So half duplexes, townhouses, apartments.
And we're talking all the way from one end of the Greater Vancouver board to the other end of the Greater Vancouver.
Yeah, it's the whole board.
This
the
is
whole
like
board.
Coquitlam. This is all the way from UBC to Coquitlam and the mountains down to
Sunshine Coast, Maple Ridge, all the way up to Whistler. In fact, one of those big sales was a property up at Whistler.
Okay, fair enough. Yeah.
Days on market, 66. almost 1,000 sales year to date.
So since January the 1, 1,000
Yeah,
sales.
yeah.
Yeah. Okay.
And about 9 months supply, and the discount to ask about 2.3%.
Okay. So now we're talking much more of the commoner
Much more
market.
active market.
Yeah, much
Yeah.
more active market. 1 million to 2.5 million, did you say?
Yes.
Okay. So again, I think the 1 million to the 1.5 is kind of the where a lot of the action probably was. And then you get over 1.5 into the close to 2, and then beyond is probably a lot thinner up there, I would think.
It is for sure. And
Yeah.
so 2.5 to 5, 300 listings, 44 sales year to date, 20 months supply, and the discount to ask 3.7%. But then when you go 5 million plus, there's 60 active listings,
Okay.
6 sales year to date,
Okay.
59 days to sale, 2.5 years supply. And the discount on that one actually surprised me. It's a little bit less, but sometimes when the numbers are big, you get a more accurate read. When the numbers are small, there can be anomalies that you don't really make sense. But 5 million plus in a condo, very, very slow. So
So I wanted to just jump in really quick, Jeff. So if you think about it, who were the buyers for these high-end properties, whether they be houses or condos, 6, 7, 8 years ago when we were starting to reach these price ranges? Who were the buyers for this high-end stuff? Obviously, it was not a lot of local people, right?
not a lot of local
Not
people.
local people.
Yeah.
And if it was local, it was people with lots of high net worth, investors who were buying it because of ego. They'd walk in, see a phenomenal place. Money was flowing. Cost of money was cheap. You buy a secondary property, feels good. It looks good on your whatever, right?
Yeah, exactly.
And that market now has sort of somewhat evaporated. So if you think about it, how many local buyers are at this end of the market? It's just very few and far between.
There are, but Andrew, this is something that I keep coming back to. There
Yeah.
is actually a lot of money out there, and this is where we roll into the opportunity. So there's a ton of softness right now at the high end. So dramatically more inventory than demand. There's a lot of aspirational pricing out there, which is, quite prevalent in that ultra luxury segment. Longer days on market, higher price cuts. Some of those discounts are reflecting what I would consider a lot of negotiating room. So condo market, same thing, but the lower price ranges are still moving fairly well. So where's the opportunity is maybe in a trade up scenario. Like if you're just inherited something, maybe another house in a different area. Maybe you've had a liquidity event, you've sold your business and you're retiring. Maybe you've had a terrific year in the stock market last year and you've managed to isolate some of those gains. Maybe you've been in your house for 20 or 25 years, you've got the thing totally paid off, and at the same time, your income has dramatically gone up. There's a lot of buyers out there with a lot of money and a lot of buying power that are maybe just sitting in a place where they think, oh, the market's not that good. I'm kind of thinking about trading up, but maybe I don't want to. Now is the time.
There's absolutely no question. And I absolutely do agree that there's a lot of money in this city and there's a lot of local money in the city. But I think these people that are buying these properties in the few numbers that they are typically end users, people that are looking at them to move into.
Yes.
The investor market is sort of evaporated in a big way. People aren't buying these on spec.
No.
And that market that ship sailed. That's gone. So you need to find people that are actually going to move into these properties because they don't want to be paying speculation tax and what have you. Whistler's a bit different because there's no foreign buyers ban up there. And I think it's one of those exempt zones. But in Greater Vancouver, it just doesn't make sense to have a secondary property worth 5, 6, 7 million that you're going to rent out or keep vacant.
No, not at all. It's definitely owner occupiers.
Yeah.
It's definitely people that are living here and enjoying the city and everything that it has to offer. But where the opportunity then, I think, I say, so maybe what's the situation? What's a case study where something would really work? If you had 2 small condos, maybe a couple getting together, they were both smart enough to buy a condo 10 years ago and they've got it all paid off and now they could sell that at actually still pretty good price. And then if they're going up to a primarily land value, larger home, all of a sudden there's options for them that were not existing before. You can buy maybe without selling first, remove some of the subject to sale clauses, maybe give you a little bit more leverage with a motivated seller. You can look at off market or old expired listings to, target sellers that are fatigued by prior listing experiences. Maybe you could try something with a swap or a trade.
There's always opportunity. I've seen a couple of sales come through in the West Side, actually more than 2 sales, 3 or 4 sales in the last 10 days that were kind of eye-popping sales. These are 50-foot lots,
Yeah.
quiet location, older houses, so good lot value houses. Jeff, for under $3 million.
Yeah.
These are
Oh,
50,
man.
60-foot lots. These would have been $3.5 million, 3.6 at the peak. Now under $3 million. That's
Andrew, in 2016, those were 4.5 million.
well, I sold one in Kerrisdale for 4. I just sold one for 3.9. The guy paid 4.6 for it
Yeah.
in 2016. So there's
Just to be clear, you didn't sell it to him, right?
I didn't sell it. My buyers are the ones that got the great deal just now.
Yeah.
They
Perfect.
got a good deal. But I'm seeing some sales on some 50 and 60-foot lots in the West Side, in better areas of the West Side. Talking South Granville, Mackenzie Heights.
Yes.
I'm not going to give any specific addresses, but both these properties sold for under $3 million.
Yeah.
One even had, one of Mackenzie Heights had a view from the top floor with a view.
Wow.
These are renovation projects or older houses, but these properties would have sold in the mid to possibly upper threes several years ago. So
Yes.
phenomenal value. Homes were sitting vacant, whether they were investor owned or whatever, but the homeowners, for whatever reason, had to sell, dropped their price, and there was some great opportunity for people that actually decided in this market they're going to take advantage of that.
Yeah. And if you're
Okay.
that seller and you're making a trade up, if you adjust your expectations to be prepared to sell less than maybe what your ideal price was, and understand that you may need to write a lot of offers before you find that right one that really capitulates to where you see the value, great deals are made, not found, right? So if you're willing to put in the work, adjust your expectations, that gap to trade up has never been less. And I got to tell you, when you look at the difference in what you get value wise between a $3 million house and a $6 million house, or a $6 million house to a $12 million house, even though the price is double, you're getting 3, 4, 5 times the value when you're there, and just in wow factor and square footage and lot size and location. Like, it's incredible.
Yeah, you walk in and your sort of jaw drops, right? You're getting a lot
Yeah.
property, a lot more house. There's no question.
Like between the two of us, we've probably been in 10,000 houses in our career. And not to say I'm jaded, but it takes a little bit to make me go, wow.
Yeah.
But in some of these homes at the higher end, you're walking in and you're saying, oh my gosh, this is incredible.
And as a buyer, you typically in this market, you're kind of on your own. There's no one breathing down your back as far as other
Yeah.
buyers. You got time to do your due diligence. It's a pretty good time to be doing this. If you can get over the hump, people telling you, oh, don't buy now, it's too uncertain, the economy's not good, all the negative types, right? This is just a great opportunity
Yeah.
for people that can take all the noise and ignore it all.
Well, and Andrew, somebody told me a long time ago, in fact, I think it was David, he said, listen,
Yeah.
not selling your house is no different than buying a house. So if you're prepared not to sell your house at this time in the market and just ride it out, there's no difference between that and buying a place. You've got something that's worth a certain amount.
Yeah.
You're not trading it for cash, or you're not trading your cash for the money.
You're in the market.
Yeah. So not selling, same as buying.
Yeah.
So if you're worried about it, maybe you want to just sell your house if you think it's going to keep going down, right?
Yeah. Yeah. Well, I know you and I have talked about this as well before. If you need a home to live in,
Yeah.
and maybe it's not the right time for whatever other reasons. But again, phenomenal opportunity for those that are actually looking to actually trade up or whatever. There's people out there that do need to sell. And this is a great time to be sort of doing your research and being out there looking.
Yeah. And to that end, if you do need to sell right now, there's a lot of things that you can do to really maximize the result and get every dollar possible out of the home. When we talk about that aspirational pricing, having to work with whatever offer comes in, being very shallow buyer pool, there's things that you can do to get some of that leverage back on your side.
Yeah.
Just with proper process that'll make the experience that much better for you and the ability to get the home sold. Maybe you want to consider a slightly lower asking price, but negotiating less. making sure that the property is being properly marketed, that all the avenues are being exposed, that the house shows as well as it can, and that there's accessibility to get inside and show it off. When a buyer comes along, if, yeah, you can't see it for 2 or 3 weeks because everybody's schedule is a bit busy, well, maybe that's a lost opportunity. So
Yeah.
you've
Yeah.
got to be committed to that process, but then have a proper process to be committed to.
And not to be repetitive, but if you look around, Jeff, you still, with all the listing activity that's out there, the actual numbers of listings, there's still a shortage of great properties that people can move into that are beautifully staged, whether it's the owner's furniture or they're using a staging company. Gardens are beautifully groomed, meticulous. They're few and far between, they really are. And so, yeah, even in this market, if you've got a lovely home and you price it strategically, you will have people stepping up. There's no question. But again, it takes a bit more. I think you need to sort of make sure those boxes are all checked off ahead of time before going to the market to make sure you're giving yourself the best shot at selling.
You need somebody that knows what they're doing.
There you go. 30 plus years in the business, buddy. It's a long time, right? We've been through this before, right?
Yes.
We've been through this before. Although I got to say, in the 30 years, I don't recall a spring market as lethargic as we're in right now. I just don't recall, unless I'm missing or forgetful. I don't remember a market like we're seeing right now in recent memory.
There's been a couple, but I too, this is certainly down with, it was the best of times. It was the worst of times.
And again, as I said, I think our approach is we take the optimistic side of things. And for those that are looking for opportunity, we're there to help and we're there to make great deals for people. That's what it's all about.
For sure. I had one more interesting take on this, and that's sort of the investment angle. And you and I have talked a lot about some of the developers that are out there, maybe struggling a little bit with their pre-sale commitments, maybe finished towers, finished complexes with, multiple units that are out there. If you're thinking that, yeah, you know what, I'd like to have maybe a larger investment portfolio. Maybe you were thinking, oh, maybe I should buy a little small apartment building. Maybe I'll get something on the west side. Maybe it makes sense now to start looking at approaching one of these developers and saying, not in Vancouver because the cash flows don't work at all. And maybe you're going to be in one of the adjacent suburbs where there's lots of towers going up, lots of units for sale, lots of motivation to get them sold. And just saying, hey, maybe I'll take a stack of 1 bedrooms in this tower. Maybe I'll make myself a mini apartment building with a nice sweet mix of 1, 2s, 3s, and studios, and see what kind of discount I can negotiate if I'm taking 10 of these things on. If you're buying and you're thinking with a sort of a 40, 50, 60-year horizon, the good news is your grandkids will be buying or collecting rent on only a 50-year-old building, as opposed to if you buy a small apartment building now, it'll be 110 years old and they're collecting their rents.
Yeah, you're the dream buyer. Like if you walk into one of these project sales where the tower's sitting there unsold,
Yeah.
or getting close to being sold, but they've got all these available units that they need to sell, and you're coming in and wanting to buy 5 or 10 units.
Yeah.
I got to think there's some good opportunity. They're going to give you some pretty skookum incentives to put that deal together. No question about it.
And Andrew, the great news is if you're an investor, you don't want to buy the amazing view suite on the top floor, northwest corner with, you want to buy all the low ones right above the parking garage.
You want the price point stuff that you can
rent.
You
want the price point.
Yeah.
Because the rent differential isn't that much, but the price certainly can be. And the developer, oh my gosh, let me get rid of all these.
Yeah.
However they disguise it in their sales process, either off market or with a big discount on the cash back on the.
Yeah, they'll buy the mortgage down, or they'll give you a nice decorating allowance because they don't want
a credit on the statement of adjustment, something like that, right?
They don't want it to show up where other condo owners are going to see that this guy got a big discount because it's going to upset other people in the building. So they usually do it in a very discreet way. But if you're going to be buying a block of units, I got to think there's some tremendously good opportunity out there. I mean, there's good opportunity if you just want to buy 1 unit, let alone 10.
Yeah, well, if you want to buy 10 or 2 or 3, but I guess the point of that is it might be time to start looking at some of those towers and saying, okay, well,
Yeah.
my time horizon is not the time horizon of a speculator. I'm not counting on this pre-sale going up. What I'm counting on is that my grandkids are going to sell this thing 50 years from now. And I'm positive that the values, well,
Yeah. Long term. Yeah.
relatively positive.
Yeah. Yeah. You know,
Help
Jeff,
me here.
interesting concept. I've had no one approach me on that. Have you had actually any buyers that have approached you with that interest?
I haven't, but
Okay.
I think it's just one of those things that, I mean, for 30 years, nobody's been able to do it or even have
Yeah.
that conversation. So now all of a sudden we're in a different circumstance. Let's start thinking about things differently and how we can manage it.
Yeah. I just had a client a few weeks ago. He approached me and he wanted to buy 2 units.
Yeah.
Not pre-sale. He wanted finished product for investment. And we found 2 that were, I think, were priced really attractively. And those were 2 great opportunities that he secured. And so we never had a conversation about, oh, what about looking at a pre-sale or a brand new development tower where there's all these units? But I think that's definitely something that if someone's got the cash and the financial means to buy, 3, 4, 5, 10 units in a newer tower, what a great opportunity.
Yeah, for sure.
Yeah.
And then the good news is, that the maintenance, I mean, it actually comes with a warranty for the first 10 years.
10 years, yeah, or whatever, low maintenance, and you won't have all the plumbing issues that an older building's going to have, roof issues, whatever.
Yeah.
And again, if you've got that sort of that 20, 30-year time horizon, building's only going to be 20, 30 years old, then you'll probably have a nice portfolio of properties to sort of pass on when it's that time.
Well, one other thing to consider too, with all of the new rental buildings that are being built, the older rental buildings all of a sudden have got a lot more competition for tenants. So if you're in a little 10, 12, 14 suite building in one of these areas and your rent is not actually that much different than in one of these towers that's got a bowling alley and, a swimming
Amenities,
pool and
yeah.
a gym, it's going to be really hard for you to compete when you're renting things out. So you might have an easier rental. You can still get the economies of scale if you've got a number of units where you can hire a property manager to look after all these things. There's lots of advantages to it, I guess is what I want to say.
I'm glad we had this conversation. I'm going to actually go down my list and see who can I talk to that wants to buy 5 or 10 units. What a great idea.
Well, and Andrew, you know what else you could do? Like if you're with, birds of a feather, right? So if you've got clients and they've got 2 or 3 friends, a couple of dentists, a lawyer, an accountant, and a couple of doctors, and they think, gosh, you know what? Like, what if we just put together a little investment club and we went and bought 20 of these things?
Yeah,
Like,
no, absolutely. Yeah.
yeah.
Look,
I mean, the developers will throw a party for you.
oh my goodness. And again, for people that have a lot of money in the stock market, the last month's been a little bit hair raising. And
Yes.
so it's always good to be diversified.
Absolutely.
Money in stocks, but again, real estate doesn't have that same roller coaster ride, right? And the nice thing about real estate, you can leverage it, you can borrow against it, which is nice. It's usually pretty easy to do.
Mhm.
Not so much when you're buying stocks. So it's a good way to sort of diversify your portfolio. No question.
Nice.
Yeah.
Speaking of that, this is not investment advice.
Yeah. Speak to your trusted financial advisor before investing anything in whether it be real estate or anything else. We are not experts in that. We're not tax advisors.
Yes,
We're realtors, and we love it when the market goes up, right, Jeff?
absolutely. And we make a fee when we help you.
Yeah.
We just want to offer relevant, actionable information and all of that.
Yeah. Yeah. And again, for our listeners, we're the boots on the ground. We sort of hear what's going on, what the vibe of the market is. We're doing the open houses. We're right at street level. And that's what people need to hear.
Yes.
Because for someone that's sitting in a big corporate office and they're giving their economic outlook and all this and that, that's fine. It's important. But we're on the ground. We are there on the front line, talking to buyers, talking to sellers. And that's what I think it's important for people to understand what's going on.
Well, Andrew, yeah, and getting the vibe and the zeitgeist and we see the piles of shoes or lack thereof at the door, and we're interacting and we're getting a feel for the emotions of the buyers when they come through, which, all the statistics in the world are not going to change when the buyers are coming through and they're going, wow, man, the market's pretty tough, eh?
But there's always someone out there that recognizes the opportunity. And as I said, this is that time right now. So
Yeah.
if you sort of put a lot of the noise of what people are listening to out in the media, the politics and all of that, and just focus on The opportunity, I think it's a great time to sort of dip your toes in if you have the financial means, no question.
Absolutely.
Yeah,
Absolutely.
no question. So
All
on
right.
that being
Well,
said, have we covered all our topics today, Jeff?
I think we're just about there. I'm excited about doing another election recap. That was really very informative for me last time.
Well, it'll force us to actually go online and actually read the platforms, because I think it's changed a lot in the last 4 weeks with what's going on geopolitically.
Yes.
Political parties have had to pivot. They know what Canadians want. And I think what's making this really an exciting race is just, what's happened south of the border and how it's caused the politics up here to really shift. And the electorate, which of course had the Liberals in the single digits, are now neck and neck with the Conservatives. And so it's really a two-horse race, and it's going to be quite something to see how it all plays out over the next 4 or 5 weeks. I'm excited to sort of stay in tune with it.
I am too. And I'm looking forward to doing some more of that research. So why don't we call it a wrap there? And like always, if you need help with your real estate, you need to buy, you need to sell, please give us a call. And we are thrilled to help.
Look forward to seeing you all soon.
I'm Jeff Benna. This is
And
Andrew, and we are on Industry Vancouver.
see you soon.
Thanks for tuning in today. We appreciate your time and your attention. If we can be of further help or information, we look forward to hearing from you. We respectfully acknowledge that we live, work, and play on the traditional territories of the Coast Salish people, including the Musqueam, Squamish, and Tsleil-Waututh nations.